Well, hello everyone. Welcome to your Daily Five. I'm Joe Duarte, your host this morning. And just to remind you, I'm the author of Trading Options for Dummies and the Everything Investing in Your 20s and 30s. I write articles for StockCharts.com every week. And if you're interested in more of what I do, please take an opportunity to get a free trial for Joe Duarte and the Money Options for .com. Now, today, we're going to talk about 5 charts to get you through a market rotation. Let's get started. As always, we want to talk about our sound trading principles, specifically during a potential market rotation versus a correction. So you don't want to fight the Fed. The Fed's not going anywhere right now, but they are talking about it, which is causing some volatility. Don't fight the market's momentum and dominant on the ground trends. When the market's going sideways and it's volatile, it's a little bit difficult to make sense of things. That's what I'm going to talk about today. Want to stick with strong sectors and stocks? Again, something I'm going to talk about in detail in a couple of more slides here. Specifically during these times when markets get volatile, you want to trade in those small lots and focus on your stocks relative to the market. That means if your stocks are doing okay, then there's no reason to panic and sell them. If you're not doing okay, then let your sell stop do the work. You got big profits, especially during a market correction, you want to take some off the table. Got 300-400 shares of something, perhaps you want to take half of that position off if you made 20%. Keep those sell stops no more than 5 to 8%, especially during market correction. You get stopped out, go find something else to do. And you want to monitor those lagging sectors for potential turnaround candidates. This is crucial when you're in a market rotations because leadership is changing. Manage your cash wisely means don't be in a hurry to put your money to work. Wait until the setup is right to make the right trade. So let's look at a market correction. Very simple characteristics are the money is moving away from most stocks. That means the market's falling. And if you look at the options market, you see that put option buyers are overwhelming call option buyers. It means the market has a directionally bearish bias. And of course, prices falling through support levels. So market correction is pretty easy. Now, market rotations. Let's do this in 2 parts. First thing you want to look at is options trading. It's volatile. It moves back and forth between put buyers and call buyers. It's hard to make sense of things. Some days look pretty good when the market's going up. Some days look pretty bad when the market's going down. And next thing you know, things are changing. That's because money is moving away from prior leadership groups. In this case, I'm going to highlight recent leadership, such as housing and lumber. However, if you look closely, money is also moving into new leadership, which at the moment seems to be consumer and biotech. So part 2. Let's look at market indexes in the individual stocks, and they're all getting hammered, but not so much if you look closely. Because of the New York Stock Exchange decline line remains in an uptrend, the market trend is still up. And of course, money is flowing out of recent leaders, but money is flowing into new leaders. So you want to look for stocks that show relative strength and look for stocks that are nearing breakouts. Let's look at things very closely here. The advanced decline line, everyone that sees my videos knows I look at this advanced decline line with a lot of modification. First, look at complexity zone. That means that things are going right. This is the market sweet spot. Anytime the market's above the 50-day and the 200-day moving averages, that means you're in the complexity zone. Chaos zone is anything below the 50 and 200-day. The edge of chaos is that area in between the 200-day and the 50-day. That is where things happen and they congeal and markets move up or down. Let's focus very closely here on the 50 area for RSI and the 50-day moving average, because this is actually a crucial part of telling whether you're in a market correction or rotation. If we were in a correction, you'd see a crash like we saw here through the 50-day, perhaps through the 200-day as you see here. Clearly market correction, clearly heading into the chaos zone. Rotation, what you see is a lot of volatility. Look at this. Advanced decline line makes a new high, and then breaks right through the 20-day moving average the next day, only to bounce back. That is pure rotation dynamics. And you can tell because the RSI at 50 holds essentially and bounces right above it, where if you're having a major meltdown, it breaks below 50. Okay, so 50-day moving average and the RSI 50, real important in giving you the big picture in rotation versus correction. Similar thing with the S&P 500, another way to look at this. And again, you want to look at it very closely, the same kind of picture here. As long as it's above 20, the 200 and the 50-day moving average, you're in the complexity zone, the trend is up. There's a lot of volatility, but it holds up at the 50-day moving average goes up, accumulation distribution line, not broken. On balance volume, again, weakens, but not breaking down, which tells you you're still in a rotation. So the same kind of thing happens down here. You see that not a complete oversold reading of the RSI, but it did break below 50 recently. So, but nevertheless, just keep an eye on the trend of the New York Stock Exchange advanced decline line. Try and confirm it with the S&P 500. So where is that correction or rotation starting? Well, until recently we had lumber prices that were very high. And, you see that they've broken down. So money is coming out of lumber commodities and of course, related stocks as well. Now, such as housing stocks, you look at DR Horton here, which was a leadership stock, broke down completely. And as a result, money is coming out. Stocks like DHI are the ones that are bringing the S&P 500 down, causing the volatility. You can see the big bars here that you saw in the advanced decline line, the S&P 500. You want to look more closely. Accumulation distribution breaking down, on balance volume already broken down, heading over to oversold, but not at all making headway, failing again here at the 50-day moving average. So rotation, money is coming out of the leaders. Now, you want to look at the new leadership, okay? So here's a stock called Aaron's Company, the former Aaron's Rents. It's a company that rents TVs and furniture to people. It's basically a retail stock of with a interesting niche. But as you can see, as the S&P 500 has been crashing, DR Horton has been crashing, money has been moving into Aaron's. So we want to document that. And of course, we can see that accumulation distribution is very positive. On balance volume is again confirming. We had a trip down here to the 50 RSI, which held right at the 20-day moving average. Stock is right back up. Bought the stock a few days ago, recommended it to my subscribers at Joe Duarte and the moneyoptions.com. So again, you want to look for the emerging leadership in a correction and in a rotation, because the New York Stock Exchange advanced decline line is holding up and the S&P 500 are holding up. So we're not in a correction at this point. Second emerging leader, and this is a stock that has had a rough, very rough patch. This is Gilead Sciences. Of course, they have the remdesivir drug that helps but doesn't cure COVID. The market doesn't really like that very much, so it got beat up pretty badly. But look here, talking the S&P 500 has been jumping all over the place. Money's coming out of housing stocks. And look here, GILD is near a breakout, and that's important. So let's look at this closely. Look at this right here. This is volume by price. That's a big cluster of resistance right in this general area here around 67. The stock is now broken above it. There's a lot less resistance over here. That means that for now, the path of least resistance is up. And again, it's in the complexity zone. It's above the 200-day, above the 50-day. Accumulation distribution moving higher. On balance volume starting to pick up. Getting somewhat oversold, so overbought. So it might consolidate. Nevertheless, during a rotation, we want to look for emerging leadership. Finally, we want to look at relative strength, because stocks that hold up during market corrections or market rotations are likely to be very strong when that situation resolves. This is a company called Valvoline. Of course, everyone knows about Valvoline motor oil, but few people know that Valvoline is now becoming a much larger quick oil change shop owner. And that is going to improve its cash flow. And the company is very bullish about what's going on. The market's clearly recognized it. And so this is probably a stock that's going to have some legs for a while. And it's clearly documented because during the market's rotation and aggressive volatility, it has held up very nicely and it's starting to break out as well. And again, let's look at all the usual characteristics of a bullish stock. Broke out right here above a lot of clutter. the volume by price indicator. Now it's heading nicely higher, going through all kinds of small levels of resistance. You can see here that this bar is telling you that most of what's going on here is buying. There's very little pink, and you can see accumulation distribution on balanced volume again. Momentum held at the zero line, starting to pick up, a little bit overbought, but not too much to worry about because even in the consolidation period here, the stock looks pretty strong. So let's recap. In market correction, most stocks fall. Support levels don't hold. So what you want to do is stand aside in the market correction. Of course, market correction is fairly obvious once the New York Stock Exchange advanced decline line clearly breaks through the 50-day moving average and the 50 level on the RSI. Now, in market rotation, there's a lot of volatility. Money is coming out of leaders, former leaders. Money is flowing into new leaders. And the New York Stock Exchange advanced decline line remains in an uptrend. So that's a key to helping you tell between a rotation and a correction. So in a rotation, what you do is you look for stocks that are showing relative strength, and you look for stocks nearing breakouts. I'm Joe Duarte from Joe Duarte and the moneyoptions.com. Please take a free 30-day trial subscription to my website. Consider getting my books, Trading Options for Dummies, investing in your everything guide to invest in your 20s and 30s, and check out my articles on StockCharts.com. We'll talk again.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.